So when you have a strong dollar, one thing happens. It sounds good, but you don't have tourism, you can't sell tractors, you can't sell trucks, you can't sell anything. So he went on to say that manufacturers, would be the first to benefit from a falling dollar. Japan and China fought for weaker currencies for decades and were able to dominate markets over the years. Now it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. These are the crumbs that I speak of that I've been following for 5 years. You find crumbs and either you take it for what it is and realize that these people who talk, part of their conscience comes out when they speak. They may not be fully honest, but they're telling you what they want. They want a weak dollar. He knows a weak dollar is a necessity, and that's where we're going. Why they would have to have it pegged to something like gold and redeemable in gold, because the longer the duration, the higher the risk. And who the hell wants that? Especially from countries that are our competitors, our foes. They don't want to support the dollar anymore, and why would they? You can see the infrastructure with BRICS Bridge and BRICS Pay, etc. Let's go back to the metals. I found it really interesting. The head of the Japan Bullion Market Association, Bruce Ikemizu, Ikemizu, formerly head of the Chinese bank ICBC Tokyo Precious Metals Desk, and now head of the Japan Bullion Market Association. He came out and said the market may already be broken. And he says London appears to have virtually no physical platinum available for delivery. He says that he thinks that there's basically no platinum in London and Zurich, and yet they're still trading nearly 3 million ounces a day of London promissory note cash contracts for immediate platinum ownership and delivery. I mean, he says something's about to break. What could possibly go wrong if you're trading 3 million ounces a day of promissory notes to deliver? And he thinks they virtually have nothing. And he says that because there's a 30% interest charge to borrow platinum. It's ridiculous. It's never been that high.
Jeff Bezos isn't the only one unloading stock. Since late June, he's sold over $5.7 billion in Amazon shares. That's a red flag. When insiders, those with the best visibility into corporate performance, start dumping, it often precedes a downturn. Across the board, executives are exiting their positions in equities. Despite Wall Street optimism, actions speak louder than forecasts. These sales align with broader trends, indicating a loss of confidence in the long-term strength of the markets. Insiders likely see a storm brewing, whether inflation, geopolitical shifts, or asset overvaluation, and they're getting out while valuations are still high.
He says he cannot recall a time where lease rates were even close to that high, and have rose that sharply. But when you talk about the banks that who borrow, or the producers, like recyclers, like jewelry manufacturers, industrial users, they're behind the banks, that they're the actual users who borrow from them. So why would you pay 30% interest to borrow? Why not just go buy it flat out? And I think the frailty of the London platinum market it could very quickly just spill into the London silver market, which we've talked about, where you have lease rates at 7% for 1 month. I've never seen it that high in my career, ever. It's the same issue. They have no supply. Again, I think this is something to continue to watch. This is why I think things are changing in every way. And the rest of the world, they're wise to this, and they're kind of like the vulture circling the wounded animal. And the wounded animal is the LBMA. A couple more things to talk about off topic. I found it interesting that Jeff Bezos has been on a selling spree since late June. He has sold $5.7 billion worth of Amazon stock. Now, if he thought that the stock market was going to go up and up and up, why would he sell $5.7 billion? This goes in line with all the other insider selling we've talked about ad nauseum. I also find it interesting talking about saving in dollars. You're destined to go broke. Well, part of what Trump wants is a weak dollar, right? If you revalue gold, by the way, what you do is you devalue the dollar. When Roosevelt increased the price of gold from 20 to 35, he did it by devaluing the dollar by 40%. He wants a weak dollar to make manufacturing more competitive. So part of bringing back the manufacturing and reshoring it, you have to have a weak dollar. Look at what the dollar's done. It's fallen 11% this year. And so he wants a weak dollar, he wants low interest rates so that he can, and then ultimately, you have the stable coins front loading the short end of the market to facilitate debt, but then you peg gold to the back end to have zero borrowing costs to bring back your manufacturing with a weak dollar. He said yesterday, or the day before, that he likes a strong dollar, but you make a hell of a lot more money with a weaker one. He says,
Donald Trump's economic strategy hinges on devaluing the dollar. While publicly he claims to prefer a strong currency, his actions and historical remarks tell a different story. A weaker dollar makes American manufacturing more competitive and facilitates reshoring. Historically, revaluing gold has gone hand in hand with devaluing the dollar, as seen during Roosevelt's 1933 gold price increase. In 2024, the dollar has already fallen 11%. The strategy is clear: weaken the currency to spur exports, cut interest rates, and boost production. But this tactic risks unleashing another inflation wave, repeating the same boom-bust cycle seen over the past decade.
so when you have a strong dollar, one thing happens. It sounds good, but you don't have tourism, you can't sell tractors, you can't sell trucks, you can't sell anything. So he went on to say that manufacturers, would be the first to benefit from a fall